What's all this business about Goldbach levels?
In this goldback teaching, I'm going to provide you with my near-term pricing targets for Bitcoin during this dump of all-time highs. Now, this is not financial advice. Do not be putting on trades based off of technical analysis from a random person on YouTube. Do your own research, especially when you're dealing with goldback. Make sure you understand what goldback is first, and there's a link to Hoppy's book in the description to this video. So let's have a look at Bitcoin. So this is Bitcoin on the monthly chart. Now, some education first, and I provided an in-depth teaching on this on my YouTube channel, but I'll run through it quickly. So the way Bitcoin works is it essentially moves through goldback dealing ranges, and as it breaks one dealing range high, it then produces an expansion. Now, if you don't know what goldback is and you don't know what the dealing ranges are, then please watch my video. There's two videos, main videos, which are introduction to goldback videos. So what you need to know is when price was trading below 59,049, the dealing range was between 0 and 59,049, right? Because essentially the goldback power of 3 numbers dictate the dealing ranges. So let's have a look. So when price was trading below 59,000, so up until around this point, okay, and there's an in-depth teaching on this, so I'm not going to run through all of it. Price was trading between 0 and 59,049. Okay. Now, a quick shortcut to the power of 3 dealing numbers. The indicator I really like is the AMD power of 3 goldback levels indicator. Okay. And it's got the dealing range numbers in here. 59,049. Okay. So when price was below that, that's the dealing range that was in play. Now, there's a full breakdown on the previous video. Once we broke 59,000, we had a dealing range expansion. Okay. With the low of the dealing range is still 0, but now we need a new hypothetical high of the dealing range. Okay, and that high would be 177,147. Okay. 177,147. Now, this tells us a lot. Okay. So how do we verify this? I like a little indicator called imbalance, which just shows me where the imbalances are. So what did we do? Okay, why did we dump all the way down to this level? Okay. Because this is the fair value gap GB level, and we needed to fill this specific fair value gap. Now, I have used a goldback fib to show you the dealing ranges, but with the indicator, it will produce these for you. Okay, so if you just go to the indicator and then put in 177,147 is your power of 3 number, you'll get the same levels. Okay, we've got to make sure we're not half shifted. There we go. Cool. So there's the fair value gap, and we retraced and filled this specific fair value gap. Okay, so where are we now? We are in the breaker zone, and that's why we've had the retrace, because you normally get a retrace at a breaker when it comes to classic ICT market structure. Okay, so we need a retrace at the breaker, and this is what we're having, but how algorithmically precise is this retrace? So what you can do is between these partitions, so all of these are partitions, so this is the breaker partition. Between the partitions, you can create a fractal dealing range based off of goldback. So the low to the high can be fractalized. Okay, I think that's relatively accurate. So now we, as goldback traders, we want to know what algorithms are running between these dealing ranges. And as I've shown you on my channel time and time again, the easiest algorithm to understand is algo 2. And I've done an in-depth video on algo 2 where I show you it's a more accurate version of ICT's OTE model. So what the algorithm 2 tells you is price should go from the rejection block to X, so some point, retrace to the fair value gap, and then terminate at the opposing order block. Okay, so bear this in mind, and I have a number of videos on algo 2 on my channel which you can check out. So this is the dealing range that we're in. Let's remove this standard indicator now and keep the fractalized goldback dealing range. What I'm going to do is I'm going to lock this indicator, or lock this so I do not lose it. And I'm also going to remove the extensions just to make it a little bit more tidy. Okay, it's locked, so it should not move now. Now when we go down to the 4 hour, what can we see? Okay, which algorithm played out? And I will make it easier for you. I'm going to write out the PD arrays, the partitions. So you have the rejection block in this level. The 3 to the 11 is the order block. Then you have the fair value gap level. Liquidity void. Breaker. Mitigation block. And then we have EQ, equilibrium. So remember, what does goldback help us to understand? It helps us to understand what the full dealing range is and where the premium discount array should fall within that. They should fall within these fixed percentages. So what do we have here? We have the order block in the order block partition. There's your order block. Okay, up close candle. Let's make it easy for you by removing that. And then we have the fair value gap in the fair value gap partition. Okay, this is a liquidity void. Liquidity void is the breakaway. So when you see ICT in his old videos and he says, okay, price should explode now. Okay, that's because he knows, he uses goldback, he knows after you have created the fair value gap, then you have the liquidity void. Okay, retraces to the breaker. And then what did we do? We retraced to the fair value gap. Now the full version of algo 2 is actually rejection block to the breaker, to fair value gap, then it terminates at the opposing OB. So in this case it was perfect because we had rejection block down to the breaker, and look how it wicked into the fair value GB level. See that? We don't care about the visible fair value gap. We care about the partitions. Okay, so an ICT classic trader would have their order in here. Okay, but because we know we are goldback traders, we know it's more about the levels, we would put our order here. Okay, so we get tapped in. And then what did price do? Okay, what does ICT tell you? You want to sell in a premium okay, and buy in a discount. So you want to buy back at the first liquidity in a discount. So what did we have here? Let's move this along a little bit. What was the first piece of liquidity in the discount? This was the first piece of liquidity in the discount. Okay, not this, not this, not this, none of this. That's equilibrium, not even this. That is equilibrium. This is the first piece of liquidity. That's where you would have taken it off. Okay, your stop is safe here. Your entry is safe. And what it actually did was it engineered more liquidity in a discount. So this was liquidity in the discount. And this was engineered liquidity in a discount. Okay, because what did we create? We created relatively equal lows here and here are relatively equal lows. There you go, there's your equal lows. So this was the target liquidity in a discount, created relative equal lows in the discount, retraced, and then we took this. Okay, now what is the target? What is the logical target for algorithm 2? Okay, it is the bullish order block. So if this is the rejection block, this is the bullish order block. That is the target. So if this is our price target, anywhere in here, $53,700. Now be careful. Whenever price gets to an equilibrium, it hangs around there. So you may get consolidation, and on the lower time frame, this will present as a seek and destroy. Okay, so we're going to get chopped up. If you're looking for swing trades here, you're better off scalping here until we make the big move down. Now, the nice thing about the breaker level is it can be fractalized also at the 50%. So if you have Hoppy's book, you'll know about that. You'll know about the non-GB levels, and then you can fractalize again, okay, to get really precise entries. So if you were to have taken this trade, right, how would you have taken it? You could have done something like this. Entry here. You could have put it at this liquidity, your stop, and you probably want to take it off at the OB. A 6R trade. 677% return if you would have taken this and held. Now, of course, you can just take it off at any liquidity in the discount. That's also very valid. Okay, if you did that, then you would have got something like a 3R trade. Okay, but if you want to hold the trade as a swing trade, got a nice 6R trade here. If you would like to learn how I trade goldback using my golden bullet time and price strategy, which I use for Forex, index futures, oil, gold, silver, crypto, then there's a link to my mentorship program below.